And here, what if I told you that while the world was focused on Trump demanding a $600 billion payout from China, something far bigger and far quieter was happening behind the scenes? Because as Washington raises the pressure and the G7 scrambles to present a united front, Beijing isn't responding with threats. It's responding with gold. Real, physical gold, tons of it, quietly pulled into China's reserves, while G7 nations continue selling theirs to stabilize budgets, currencies, and bond markets. And here's the twist. This silent gold shift could reshape global power more than any tariff or sanction. Stay with me. The real story is just beginning. When former President Donald Trump publicly demanded that China pay $600 billion in reparations to the United States and its G7 allies, global markets didn't just react, they flinched. The number was so massive, so unprecedented, that even longtime political analysts admitted they had never seen anything like it in modern economic diplomacy. The proposal wasn't framed as a negotiation, but as a bill Trump claimed China owed for the damage caused by years of trade imbalance, intellectual property disputes, and geopolitical tensions. But behind the headline, something more subtle was happening. The G7 was not united on how to respond. Japan and Germany, both deeply intertwined with China's supply chains, feared retaliation that could cripple their manufacturing sectors. Canada and the EU were concerned that escalating demands could trigger a new wave of tariffs that would squeeze consumers already facing inflation. And Italy, which had only recently recalibrated its relations with China after the Belt and Road exit, wanted no part of an economic confrontation that could cost its fragile economy billions. In other words, Trump's message landed on the world stage like a grenade, and no one wanted to pick it up. However, Beijing's reaction was the most surprising part. Instead of responding with anger or issuing counter demands, China stayed almost completely silent. No fiery speeches, no sanctions, no military posturing. At first glance, this seemed like restraint, even weakness. But in reality, it was the opening move in a much larger strategy, one that analysts didn't immediately notice. While Trump's $600 billion demand dominated Western media, Chinese state outlets barely mentioned it. Instead, they quietly published updates on the country's monetary strategy, economic resilience, and, buried deep in financial bulletins, changes in gold reserve data. These weren't random updates, they were signals. Because while Washington was trying to force China to pay in dollars, Beijing was preparing to make the dollar itself less important. And the first step in that process was something economists call stealth accumulation, building massive gold reserves without drawing global attention. Trump's demand created headlines. China's silence created opportunity. And as the world debated the political theater, Beijing began executing a plan that could shift the balance of financial power, one gold bar at a time.
As global media kept replaying Trump's $600 billion demand, something very different was happening inside the People's Bank of China. Month after month, China was quietly increasing its official gold reserves, not in dramatic announcements, but in small, almost unnoticeable increments. And while the world interpreted Beijing's silence as hesitation, in reality, it was accumulation. To understand why China was doing this, you have to look at the timing. The G7 nations, especially the US, UK, and parts of the EU, were selling off gold in small but steady amounts to reinforce budgets, stabilize currencies, and support treasury markets under pressure. Gold, for these countries, was becoming a tool for crisis management. But for China, gold was becoming something else: insurance against the next stage of geopolitics. For more than a decade, Beijing has been reducing its exposure to the US dollar. It slashed its US Treasury holdings to the lowest levels in 15 years, shifted trade deals toward yuan settlements, and built its own cross-border payment system to bypass SWIFT. But gold is different from all of those steps. Gold is a direct challenge to the financial architecture the G7 controls. Because gold is the one asset the US cannot sanction, the one asset the IMF cannot freeze, the one asset that does not depend on Western banks or digital systems. And while official numbers show China slowly accumulating, analysts believe the real figure could be far higher. Some estimate that the Chinese government, through state banks, sovereign funds, and the military, may control twice the amount of gold reported publicly. If that's true, China could already be sitting on the largest gold reserves in the world, quietly surpassing even the United States. But why does this matter right now? Because Trump's $600 billion demand didn't just annoy Beijing. It gave China the perfect reason to accelerate a strategy it was already pursuing. If the US and G7 were going to weaponize the dollar again, China would build a shield that couldn't be touched. Gold is that shield. And as G7 nations continued selling off gold to patch economic pressures, Beijing was buying the very asset its rivals were unloading. This wasn't coincidence. It was a transfer of real wealth from the West to China, happening in plain sight. While the world argued about tariffs and reparations, the stage was set. The real shift was underway, and almost nobody was paying attention. To understand why this story is so explosive, you have to follow the gold, literally, because while Trump demanded a $600 billion payout and the G7 publicly presented a tough stance, behind closed doors, these same countries were quietly selling off parts of their gold reserves to stabilize domestic problems. And every time the G7 sold, there was one buyer consistently stepping in: China. But this wasn't happening through big, visible transactions. It was happening through dozens of small channels: bullion banks in Switzerland, state refiners in the UAE, and discrete purchases routed through Shanghai and Hong Kong. None of these deals made headlines. None appeared as political gestures. They were simply labeled as market transactions. Yet the pattern is unmistakable. Over the past year, several G7 countries have faced growing fiscal strain. The US Treasury struggled to sell enough bonds at auctions. The EU needed liquidity to cover rising energy and manufacturing subsidies. Japan was fighting to defend the yen as it plunged to multi-decade lows. Gold became the emergency lever, a silent rebalancing tool. But here's the twist. While the G7 was selling gold to solve short-term problems, China was buying gold to solve a long-term one: the dominance of the US dollar. Beijing didn't need to pressure anyone. It didn't need to retaliate against the $600 billion demand. It simply waited. And because the G7 was under financial pressure, the gold they released into global markets flowed naturally to the strongest buyer with the deepest pockets and the longest strategic view: China. Think of it this way. The G7 was trading long-term strength for short-term stability. China was trading cash for power. And all of this was happening with almost no political noise, no sanctions, no public negotiations, no fiery speeches. Just a quiet siphoning of the world's safest asset away from the West and into Beijing's vaults. By the time analysts finally noticed the trend, months after the purchases began, China had already locked in the gains. And here's the most ironic part. Trump's $600 billion demand intended to pressure China may have accelerated the very shift he wanted to prevent. Because the more unpredictable US policy becomes, the more attractive gold looks, not just to China, but to every country preparing for a future where the dollar is no longer unquestioned, and China understands that future better than anyone. If you think China's gold accumulation is about wealth, you're missing the bigger picture. Gold isn't just a commodity, it's a weapon, a shield, and a bargaining chip all at once, and China is using it to prepare for a world where the US dollar is no longer the center of everything. For decades, the G7 relied on a simple formula: control the global financial system, and you control global trade. The dollar, SWIFT, IMF, World Bank, Treasury markets, these were the pillars of Western dominance. Any country that stepped out of line could be sanctioned, isolated, or cut off. But gold changes that, and China knows it. With enough gold, a country can back its currency with real assets, not debt support financial markets without relying on the dollar bypass. Western banks entirely protect itself from sanctions, settle international trade, even during a crisis. And that's exactly what China is building. Slowly, methodically, and without unnecessary headlines. Just look at the recent moves. New gold-backed yuan settlement tests in the Middle East. A surge in Chinese refiners producing bars that meet global standards. Central bank agreements with countries facing dollar instability, a rising trend of Chinese companies paying for commodities in yuan. Each step is small, each step seems harmless on its own, but together they form a roadmap, a blueprint for a future where China has a parallel financial system ready to activate. And here's the part Western politicians don't want to admit. The G7's own economic pressures are helping China build that system faster. Every time the US runs a record deficit, every time Japan intervenes to save the yen, every time the EU sells gold to plug a budget hole, they weaken their own long-term position because China isn't just buying gold, it's buying leverage. Picture two vaults. One, in Washington, is slowly being drained by debt, inflation, and crisis management. The other, in Beijing, is being filled quietly, brick by brick, with the one asset no central bank can print. And in a future financial showdown, whether triggered by tariffs, sanctions, debt crises, or geopolitical conflict, that contrast will matter more than any statement, any demand, or any press conference. Trump's $600 billion demand might have grabbed headlines, but China's gold strategy is what's really rewriting the future of global power. So here's the truth. While the world was distracted by Trump's explosive $600 billion demand, the real power shift was happening quietly, invisibly, and irreversibly. China didn't need to shout, threaten, or retaliate. It simply kept buying the one asset the G7 couldn't defend, their own gold. And that's what makes this story so important. This isn't about tariffs. This isn't about reparations. This isn't even about Trump's political theater. This is about the foundation of global power, who controls real wealth, who controls global trade, and who controls the future of international finance. The West is playing a short-term game, selling gold to stabilize budgets and tame inflation. China is playing a long-term game, accumulating gold to reshape the world's financial architecture. One strategy buys time, the other buys power. And if the trend continues, the global balance could tilt further than most people realize. Not with a war, not with a crisis, but with a slow, silent transfer of real assets from West to East. If you found this analysis valuable, make sure to like, comment, and subscribe. Tell me below, do you think gold is replacing the dollar, or is this just another cycle in global politics?